What's up, stock compounders? Brad here. So I have been going down the Akre rabbit hole ever since Mohnish Pabrai mentioned Chuck Akre in his recent talk. But this particular podcast with Invest Like the Best, this was in 2019. And there's one segment in here that really grabbed my attention. But the whole talk is fantastic. If you guys haven't heard it yet, definitely take the 47 minutes to listen to this podcast in full. But the segment that has really jumped out at me, I actually just tweeted out today, and I want to go a little bit deeper into that in this video. So let's take a look at what that is. It's this piece that I transcribed. It's like a minute and a half in the podcast. So I got to get this out of the way a little bit here. We dove into the numbers on Visa and Mastercard. We discovered that the operating margins and the returns on capital there's not a word in the English language that's superlative enough to talk about them. You could cut the margins at Mastercard and Visa in half twice, and you'd still be above average for an American business. Clearly something extraordinary is going on there. But what is it, right? What does this tell you that the numbers are so strong? Well, A, there's a big target on their back, right? Everybody wants a piece of that. And B, they're probably jamming every expense they can think of into the income statement to try to reduce how good the margin is that they're showing. And we're going to talk more about this in this talk from Peter Thiel, Competition is for Losers. We spent time trying to figure out what's causing that. What is causing these numbers to be phenomenal with Visa and MasterCard? We think we know, and we've quit talking about it, okay? And Chuck, he didn't really explain why they don't talk about it anymore in this particular podcast episode. But I think there's probably two reasons. One is, the more you talk about what you think about a company, your beliefs, your ideas, your convictions about a company, the more you drill that in, and the harder it is to change your mind, okay? So that's one piece. The other piece is Akre Capital Management is an owner of Mastercard, right? They have as much skin in the game as the people who work there, right? The management team. So they don't want regulators to catch wind that there's a potential monopoly operating here. They don't want competition to understand, here's how Visa and MasterCard are really making a killing, right? Here's their secret sauce. So, of course, if you're an owner of an incredible business like this, you don't want everyone to know what the secret sauce is. So I think that's a big piece of it as well. And then the last piece here, if you read any research from Wall Street, we read very little. That's Akre. There is no one who talks about that. Rates of return that they're earning on their capital, okay? Wall Street in general has a completely different business model than we have. Our business model is to compound our capital. Wall Street's business model generically is to create transactions. What's the best way to create a transaction? To create what we call false expectations. What are false expectations? Quarterly earnings estimates. All right. If Wall Street could have daily earnings estimates, I'm sure they would go ahead and do that. Right? They want to create this narrative. The company missed by a cent. They beat the expectations by a cent, right? It's all this short-term noise that gets investors to engage in more and more transactions. So brilliant stuff here from Chuck Akre. And a lot of this reminded me about a talk that Pabrai did around Tencent, okay? Clearly, Tencent is a phenomenal business. And he actually Pabrai did reference this talk that Peter Thiel gave, Competition is for Losers. because he was trying to dig into Tencent's business model and really understand, the numbers look fantastic, but why? What's causing this incredible, these incredible numbers? What's behind it? And it was very difficult to figure that out. He wasn't getting anything from management, certainly wasn't getting anything from Wall Street. The way that he figured it out was to, learn from the guy who's been invested with Tencent for like 20 some years, Koos Becker of Naspers. So back even before Tencent went public, Naspers bought like 33% of the company or something like that. So Koos Becker has had decades to observe Pony Ma at Tencent. And that's really the only way Pabrai was able to kind of tease apart this incredible business model that is Tencent. And it sounds like Akre was able to kind of crack the business models of Visa and Mastercard, kind of understand what's under the hood there that's producing these incredible results. But he has no interest in letting the world know what that secret sauce is. So let's take a look at this Peter Thiel talk real quick. So this slide is a brilliant slide. So the differences when you have a business that's a monopoly and you have a business that's in a very competitive environment, and there's not much differentiation between it and its peers. The monopoly business is going to point to all of the reasons that it's, struggling, right? It's a small fish in a big pond. It's going to try to be perceived as closer to the middle, okay? The business operating in a perfect competitive environment, right? Really no competitive advantage to speak of, is going to point to all of the ways that it's got an edge, right? That it has a moat, that it's got these advantages over its competition. So the perception, if you're listening to these companies talk, is that there's a very minor difference between the monopoly and the company in perfect competition, because they're both lying. They're both lying to try to get closer to the middle, okay? To try to move away from the extreme that the company actually exists at on this continuum. Now, if we jump forward a few slides, and this is going to be no surprise to any of you, the reality is, it's a major difference, right, between a company that's operating as a monopoly and a company that's operating in perfect competition. So, it's a bit of psychology. When you're listening to management, when you're reading an annual report, when you're looking at a kind of a pitch presentation from a company, keep that in mind. Are they really screaming from the mountaintops about how great they are? Or are they trying to downplay? Are they trying to convince people, hey, this is a tough business, and kind of invert the essence of what they're trying to communicate here? That's probably closer to the truth. So that's something I noticed. And then, just jumping into Mastercard's financials. This is in ticker terminal. We can go down here and look for ourselves. We could look at the normalized net income margin. Okay, 32% from the last 12 months. So again, take half of that, 16%, take another half of that, 8%. That's probably slightly better than the average American public company. Maybe 6 or 7% is probably average. So clearly an incredible business. And then you look at the free cash flow margins as well. Just knocking it out of the park. Mastercard is. And then here's a resource I just came across, ROIC.ai. So this gives financials. What I can see here is 15 years worth in this really neat kind of chart. So if I scroll down, this is Mastercard, I can look at the return on invested capital over the last 15 years. Last 12 months, 34%. Okay. And just going across the board here, I mean, ever since the great financial crisis of 2008, return on invested capital just very strong, very strong. And that's really the first leg of the three-legged stool that Chuck Akre looks at. What is the return on capital? The return on invested capital, return on capital employed. What's the return on the owner's capital in the business? And of course, the other two legs, great management, and that's really two parts. Does the management team have exceptional skill in operating this business? And does it treat shareholders fairly, right? Even though it doesn't know who they are, right? Is it treating these strangers who are part owners of the business fairly, okay? And then the third one is reinvestment opportunities. Can it take these incredible earnings that it's generating on its capital and plow it back into the business to continue earning those high rates of return? If it can do that, that is a supercharged compound growth engine. And Chuck Akre will freely admit with Mastercard, they can't plow everything back into the business to generate those similar high rates of return. They just don't have those opportunities. They're generating too much cash. What a problem to have, right? So, they're paying out dividends, they're buying back stocks, they're making acquisitions to try to improve their technology. They're doing all these things to try to put the cash to work. So because it's so big in terms of the total market, the reinvestment leg of the stool isn't quite as exciting as it could be for Mastercard. But clearly incredible growth over a very long period of time. If I look here, what has this done over like the last 17 years? So 16 years, okay? And I think this may be when this company, when it went public. I guess that was in like 2006. 33% compound annual growth rate. This is almost doubling every 2 years for the last 16 years, okay? It's an 86 bagger over 16 years. So just an incredible business. Mastercard is. The reason Akre Capital Management bought Visa is because they maxed out what they could allocate to Mastercard. And Visa, similar business model. So they bought a full position into Visa as well. So that's just kind of a little dive into this snippet from this podcast with Chuck Akre 2.5 years ago. And then, my little commentary on it. When you find a great business, ask yourself, what's causing it to be great? Management isn't going to tell you, right? Because they don't want to attract attention from regulators. They don't want to attract attention from competition. They don't want to give away their secret sauce. Wall Street won't tell you because that's not the game they're playing, okay? They want people to engage in transactions, right? They don't care what makes the essence of a business. That's not the game they're playing. Other investors may have insights. So this is, again, how Pabrai really cracked the business underlying Tencent, is looking at what Koos Becker said over the years in calls, transcripts, annual meetings. So that's a place to look, right? What other great investors own the business, and what have they said about it? A lot of investors write letters to their, to their shareholders, right? Their co-investors, quarterly, every half year, annually, whatever it is, and they talk about these things. What is the special sauce behind this business that I've invested in? Ultimately, we got to do most of this work ourselves. We may get a few bones thrown to us every once in a while from other great investors, but it takes curiosity, right? It takes this intense desire to understand how these things work, what's driving this, kind of unusual, unique situation that's arising in the market that's causing this great business. So I think that's about all I have for today, guys. But I've really been digging into Chuck Akre. I've listened to a few other things that he's done, and some of his younger partners, like Chris Cerrone, I believe Cerrone, did a podcast with Bill Brewster recently. I checked that out. John Neff is another one of the partners at Akre Capital Management. They did a talk at Brown University, like a value investing talks series. That was really good as well. So definitely check those out. This is a management firm that's well worth diving into and really gleaning some insights from. So just really, really dig in Akre Capital Management right now. Without any further ado, thanks for watching, guys, and I will see you in the next one. Take care.